We've got Pashupati Advani too joining in on the show right now. Pashupati, hi, good afternoon. Good to have you on the show as always. Just wondering whether to actually give in to this move by the India equity markets or wait by for that 90-day reprieve on tariffs and then see how the world shapes up.
Well, I've always been erring on the side of caution, so I would say take a step back and wait. There are obviously still some places where there is money is being attracted. Like for example, you've got there was a run in defense stocks. They've come off a little bit. Now they're back, coming down, and then they're going back up again. So that's another point. And plus, the government is continuing to spend to continue and finish the rails, the roads, and the infrastructure. So those stocks are still chugging along nicely. They keep going up and down with the market in general, but they're a pretty nice place to be. Aisha?
Right. Very good afternoon to you, Pashupati. This is Shell also joining in the conversation. I just wanted to get your view actually on various sectors that have seen a good up move in tandem with the benchmark indices. Yes, banks have outperformed as well. You also have the metal sector, realty space, all of them seeing good strength. What's your take? Do you think these sectors merit a look right now?
Well, I definitely think that metals are a good place to be. I'm not so wild about realty. I also don't like banks so much, and I don't like IT at all. I don't understand why the IT markets are beginning to move up, because that sector looks like it's under some pressure. So again, once things settle down and maybe the tariff situation also gets better, then again we will be relooking at these sectors. But frankly, the IT sector with the AI being in the game looks tough. Banking sector, well, hopefully people will get back to working and not defaulting on their loans. So that will be good. So it's all good at the moment.
Pashupati, at all on IT, does it seem like the bad news is in the price, or do you think there's more to go?
Honestly, you see statements like we haven't seen a cutback this quarter. It looks like they are going to get some cutback. And I think that, it is coming because, AI is gradually replacing the jobs. Plus the labor policy of the United States is not going to allow people to move as easily as they used to, because the immigration department seems to be having job cuts and are not able to process things. So I think at the end of it all, the IT sector is going to have to get some pressure on it, and I'm surprised it hasn't seen it so far.
Right, so that's the take coming in on the IT space. That brings me to the next question, Kunal, to you. Given the fact that, yes, IT sector, I think we did speak about this one also at length today, given the fact that this one has underperformed the benchmark indices right now, given the fact that it has underperformed so much, do you think it looks good to you, at least mid-tier IT companies, if not the large cap?
Yeah, I believe large cap IT stocks itself are a good bet at current levels. And what happens eventually is that there comes a point where a sector gets beaten down 30-40% in a very sharp manner, and then these extreme points where the indicators become hugely oversold becomes zones where the stocks and the sector itself remains more sideways for a prolonged period of time, because what happens is that the major part of the pain could probably be out for these IT stocks. But then expecting these stocks to get into a V-shaped recovery, depends on the kind of news flow surrounding the sector as well as individual stocks. So I think in that sense, what we may probably have witnessed is that a major part of the correction could be behind for these IT stocks. Price-wise, I believe that they are good bets from a medium to long-term play. But short-term wise, you might probably expect that these stocks may give you those odd rallies of 5-7%, on a very short-term basis, and then get back into corrective ways, come back into that lower end of the price ranges, try and consolidate. So consolidation should be the name of the game for many of these IT stocks from here on. But that, I think, should be a very good opportunity for long-term investors.
Right, so that's the take coming in on the IT space. Aditya, what's your take actually on the power sector? Do you think that this one is looking good after this recent rally, or you think it's a wait and watch mode when you talk about the power names, the like of a JSW Energy, or for the matter of fact BHEL, or some of the PSU names?
Well, I think it still makes sense to go long on these power stocks. To start with, Tata Power definitely stands out for me. I think it's poised to test levels of 420, 440 on the upside. Talk about JSW Energy, that too, I think is looking very attractive to me. You can go long on that. In fact, a lot of these companies who are into solar, they also look attractive, like Wari Energies. And also, I think the overall gamut of these power stocks should see higher levels from here on. And if I can just add an insurance sector to it, I think that is also one sector which has been neglected big time. And if you see, that is one sector which has shown strength last week, and this week also it's showing some strength. So I think from the insurance space, ICICI Pru, ICICI GI both look interesting to me and should see much higher levels from here on. So insurance and I think power both should stand out for me in the next 1 to 2 weeks.
Talk coming in right now on what the energy basket is looking like. What's actually, down today is Varun Beverages, Godrej Consumer Products, Marico. All these FMCG names are the ones which are taking a little bit of a beating. Having said that, let's put it into context as to how FMCGs actually moved when, our markets were crashing. The world was uncertain. It was actually FMCG which was the most resilient of the lot. So I don't know if we can bring up the 2-month chart or not, because in the last 2 months, you've definitely seen an uptick in the FMCG names come in. But Pashupati, what is your own sense? You think there are better plays in the market right now than FMCG, or would you go with it as a safer investment right now?
See, honestly, if one was to come in with fresh money today, one would definitely buy FMCG, one would buy pharma, one would buy some infrastructure. The question is whether you buy IT and I would guess you'd buy some of the banks, because the banking sector is a large chunk of the index. So you would definitely buy some banks. So I'm not so wild about that idea. But the thing is that at the end of it all, do you buy IT? Yes, it's a big chunk of the sector. Would you be fully loaded on IT? No, probably not. So I think that's what you're seeing. You're seeing some people coming back into the market from overseas, and they're looking at taking a position where they've been completely out for a while. And then they are buying a little bit of IT because they need to have some IT compared to the benchmark indices. That's my thought. It's not that people love IT and they're wanting to load up.
All right, so that's the take coming in, especially when you talk about the IT space, or for the matter of fact, FMCG space. But Pashupati, there are a couple of sectors that are actually now a bit wobbly, given the fact that what is happening when you talk about the tariffs and the entire rhetoric around that. So you have the IT space that we've spoken about, there's pharma, and the other one being auto sector. Now, if you have to choose between these two, which one would you go for? Would it be a pharma play, given the fact that, yes, India has a solid positioning when you talk about the pharmaceutical industry, especially with their global exposure? Or would you think that it is the auto pack that you look at?
In my case, I would obviously like the pharma pack, because I think pharma is there. Pharma is saving money even on US. I don't think it's going to be as badly affected as some of the other sectors, simply because they are supplying into the US mainly generic drugs. So I think they're here to stay. The auto sector is getting a bit patchy because again, banks, where the rates are going to go up, and also the demand seems to be a little less for autos right now. There hasn't been a lot of buying in this month so far. So what I'm hearing, I may be wrong, but that's what I'm hearing right now.
Other than banks and IT, which you've spoke about last week itself, are there any sectoral trends which you're seeing?
I think metals is one space which is starting to look attractive. You probably expect auto stocks to make a comeback. So I think what I sense today is also happening, that many of these two-wheeler auto stocks, not the likes of Eicher Motors, but the underperforming ones, Hero MotoCorp, Bajaj Auto, these stocks have managed to make a new multi-week high for themselves. That's a positive sign. Then you have seen, the other auto stocks, the likes of Escorts, TVS Motors, and I think Ashok Leyland. Even these stocks have come back to their multi-week highs, closer to their long-term moving averages. And these stocks have not been huge underperformers in the last 6-7 months of the price correction for themselves. So that, I believe, could be another sector which could make a comeback, even though there's not been too much of an evidence of a major short covering into this pocket as of now. So maybe I think what we're seeing as a pattern is that banks and financials are the ones which are leading the charge, because there's been a blend of short covering as well as long built up happening across the large cap names over there. And then most of the other pocket, the likes of metals, auto, some bit of IT, you're seeing very minor traces of short covering happening, which means that the pace of rally should intensify in case if these stocks see another further leg up. So I think that could be another pocket which traders could keep an eye on.
All right, so those are some of the sectors that are looking pretty attractive in trade today. Let's take a look at some of the stocks actually moving in trade today. You have HDFC AMC that is seeing good up move on back of its earnings, and post that you have the brokerage commentary coming in, target price hikes coming in for HDFC AMC. The stock is trading higher by 5.7%. You have Vedanta also that is actually seeing a very good up move in trade today. In fact, it has extended its rally in today's trading session on back of a favorable court order coming in. It's the fifth straight day of gains coming in for Vedanta. Yes Bank, HDFC Bank, ICICI Bank, all of them actually reacting to their numbers given the fact that they've beaten the street estimates. You also have National Fertilizer. Take a look at that stock because that one is seeing an up move on back of new plant plans. And also you have Devyani International that is seeing a good up move as the board has approved an acquisition of a biryani company, that is Biryani by Kilo. So on back of that you have Devyani International seeing a good up move of about 4% or so. It is gaining for a 7th consecutive session. So these are some of the counters that are seeing good up move. But that brings me to the next question to you, Pashupati. I wanted to understand what's your view on the entire QSR space. Do you think that now is the time is ripe for all of these names to actually make a comeback, the likes of Jubilant Foodworks, Westlife, or for the matter of fact, the players like Devyani International?
Well, we are at an inflection point in society. I won't say in the markets, but in society. Whether we're going to go towards the QSR or whether we're going to regress backwards and start going back to the unorganized sector again, because the unorganized sector is still cheaper than the organized sector. So I think that, we're basically sitting at the point where people are having to choose. And, something like a QSR is a marginal expense and people can do without it. Whereas if they don't have money in the bank, they will be out there cooking at home and saving money there. So I don't know which way.
But just looking at some of the other movers in trade, and today's weak link only seems to be FMCG. But Aditya, as a trend, do you think we're going to see an across-the-board move? What started off with banks is going to rub off on the rest of the sectors too? Or do you think that this market will have its share of any underperformance sectorally?
What we actually witness in market these days is there is a very swift move and a shift from one sector to the other. And in fact, that is what we witnessed from FMCG. It moved on to the banks, and now from banks, it's moving on to real estate to some extent, to IT. And I think a lot of catch up will happen in auto as well. So definitely, I think a lot of broader sectoral participation we are going to witness from here on. Maybe banks can take a step back, as I mentioned at the start, and autos, IT, and some of the real estate stocks can also take leadership. And in that midst, maybe smaller banks can start to outperform names like IDFC First and CSB Bank. These are some of the banks which can start to outperform. So definitely, I think money is going to stay here, and there could be some kind of a sectoral shift from one sector to the other. While I don't see too much of a heavy correction in the markets getting into anytime soon.
Right. We have Pashupati back with us. Pashupati, you're just making the point on the QSR space, and you believe that we are at an inflection point when you talk about that space.
Yeah, I mean, I would say, I would even put in the same breath the Swiggy, Zomato thing. Now, we would all love to have Swiggy and Zomato in our lives. But all of a sudden, if people have a cash crunch, and I'm not saying it's there now, but it could come, because right now you are at the point which you could be going better or worse, and you're just sitting on the fence waiting for things to happen, particularly waiting for comments to come out of the US policymakers, some of which are good for us and some of which are not good for us. So, and apparently Vice President J.D. Vance is also coming to India, or he's come to India to meet Modi ji. So I don't know what's going to happen, but whenever, weekends in the US tend to be time for statements to be made. And of course, today they'll be a little bit judicious because the Pope passed away. But I think in general, they make a lot of noise on the weekend, and then they try to negotiate during the weekend. So far, it seems to be, the negotiation seems to be going in the US's way. So that's what I'm seeing.
Yeah, interesting. That's, of course, Swiggy. Zomato, of course, has had more news flow as well attached to it with regards to the FI ownership as well. These are some of the stocks which are in focus. Kunal, I don't know if you have enough data for Swiggy, but go for Zomato, you think?
Yeah, Eternal. I think that's a stock which is looking attractive at current levels. And I think what's happened for this stock specifically, shows that twice or thrice the stock had broken below the 200 mark. Now apparently the news flow which started off, which triggered the selling for Zomato, for erstwhile Zomato, was I think around 255 or 260 thereabouts is where the stock had started to crack. So almost like a 20-25% correction already happened for the stock from those 260 levels, and then twice or thrice the stock formed a low sub the 200 mark, and from there on you're seeing the stock eventually seeing increase in volumes. So this is a classical sign of first the price action being more reactive to the news flow, then the prices eventually settling out, bottoming out closer to a psychological round figure mark, in this case 200 or closer to the 200 mark, and then gradually you're seeing the stock moving up higher. So I believe that with this base at 200 formed for the stock, I think from here on we can expect gradually that if the markets recover and if we just stay on to that course of uptrend for mid caps, small caps as well as selective large cap names, I think eventually we would probably expect this stock to also come back toward that 260 to 285 kind of a mode.
Right, so that's the take coming in on Eternal, that is erstwhile known as Zomato. But let's put the spotlight on one of the most important events that's taking place, given the fact that you have the US Vice President J.D. Vance that has kicked off his 4-day visit to India, as he and his family have already arrived in India, and also he's expected to meet Prime Minister later this evening. So let's hear out actually what's the likely agenda for this meeting. Sumita?
Yes, there's a lot of excitement right here in the national capital. Hectic activity going on as United States Vice President J.D. Vance, along with his family, arrived in New Delhi a short while back. This is a key diplomatic visit after Donald Trump got sworn in as the President of the United States. Before J.D. Vance, there was Tulsi Gabbard, the country's intel chief, who visited India. Now, this visit assumes significance given the fact that it is happening at a time when there is a 90-day reprieve that's been given by the Donald Trump administration to countries across the globe, with the exception of China. India and the United States are also negotiating the first tranche of the bilateral trade agreement, which both the countries are looking at arriving at or finalizing by fall of this year. The number 3 reason why this visit is important, because United States and China, well, there are tariff tensions building up given the scope of tariffs that has been increased on China, from China to the US as well. China, meanwhile, is reaching out to its other Southeast Asian partners like Vietnam, Cambodia, Malaysia, and even India. So this visit assumes significance from that point of view as well, on how the United States is looking at India as an alternative to China. So what's expected today? Well, J.D. Vance will be meeting with the Prime Minister this evening. There are members of his cabinet also expected. There will be US administration officials also who will be accompanying J.D. Vance. So that will be key. The outcome of that meeting will be key. We're given to understand that the two sides could talk about their energy cooperation, on fast-tracking the bilateral trade agreement, on technology cooperation, on defense cooperation as well, given that these are some of the key pillars of the partnership between the two nations. So that is key. Meanwhile, J.D. Vance is expected to leave for Jaipur tomorrow, where he is expected to give an address. So his commentary tomorrow will be keenly watched out for. From there, he leaves for Agra to visit the Taj Mahal, and then 24th, he goes back to the United States.
Okay, a very crucial visit, and we will get you up to speed with all the developments there. But Sumita, thanks for that update. Let's also get in some closing trading ideas or BTST ideas as well before we move forward. Kunal, what's on your list?
So I'll go with 2 buy calls. The first one is one Poonawalla FinCorp. That's a chart which is looking extremely attractive, almost like a V-shaped recovery, close to that 395 plus mark currently trading. So look out for 415 as a target, stop us at 387. And Kotak Bank is the other stock which I would continue to believe that could remain a lot more stronger even from current levels. Low beta, low to moderate beta kind of a stock, and given a breakout again about 2200 mark for Kotak Bank. So keeping 2200 as a stop loss would revise the targets higher to 2280, 2300. Traders could take a fresh bet at current levels.
Right. Aditya, any BTST trades that you've identified?
Overall, realty is looking interesting to me, Aisha. I think one can go fresh long at current levels for a target of 1800 on the upside, with the stop loss at 1600 on the downside. The second one is Polycab. I think after a decent bit of a correction, the stock has now formed a base, and now it's seeing some kind of an up move, almost on the verge of a breakout from a W pattern. On the upside, on the upside, targets will be around 5600 with a stop loss at 5400 on the downside.
All right, so those are some of the BTST ideas coming in from our experts. Pashupati, let me come to you and get your view actually on these capital market plays, the likes of a BSE or for the matter of fact CDSL, also AMC companies. How are they looking to you at this point in time? Do you think a good investment opportunity?
Well, I think that they are there in the public domain, and people do want to buy these. NSE is supposed to get being floated soon, so I think that's one of the reasons why BSE has been going up, because people want to get a proper valuation on NSE. I actually like things like CDSL and also some of the other exchanges like IEX and all. I've had IEX in my portfolio for a while, and so I think those are good solid stocks. NSE will come, then maybe NSDL will come. It's all good. I mean, that sector is therefore here to stay, and we got infinite growth because it's all internal. It's all part of the country's growth. And as things get more organized, we'll have more players in the market, and more information that has to be dematerialized. And so therefore, CDSL is also in the game.
That's the take coming in right now on some of those capital market plays. And I think BSE has hit a fresh life high as well for itself just today, I think. Aditya, have you been mapping the charts of any of these capital market plays, either a BSE, CDSL, etc.?
Oh, yes, Aisha, definitely. In fact, as a disclosure, we have these stocks in our portfolio recommended to our clients. Talking of BSE, yes, it's at a new all-time high in trade today. Looking forward to it hitting levels of 6,600 on the upside. Apart from that, an MCX is also looking very interesting to me. I think very soon it will test levels of 6,500 to about 7,000 on the upside. So both MCX, BSE, we're still quite bullish on both these stocks. Apart from that, CAMS is also something which can be looked at apart from CDSL. I think CAMS can also test levels of about 4,400 on the upside. So this entire space of CDSL, MCX, CAMS, BSE, all of them are looking very interesting.
All right, so that's the take coming in on some of these capital market plays that are looking good on the charts at this point in time. Take a look at Tech Mahindra. That one is actually seeing a good up move, 5% uptick coming in for Tech Mahindra in trade. Trent, the other one, actually seeing an uptick of about 4.3%. Remember, one of the closing trade ideas coming in from Kunal, that's Trent, IndusInd Bank, Hero MotoCorp, all of them holding on to good strength. While on the flip side, you're seeing weakness actually creep in for the FMCG pack. It is ITC, Asian Paints, Nestle, HUL. They're the one that are losing in trade. Apart from that, you have HDFC Life reacting to the numbers. Adani Ports also pretty weak in trade. Kunal, I wanted to understand and get your view actually on Adani Ports. How is this one looking on the charts to you? And not just Adani Ports. Let me actually widen the horizon to talk about the entire Adani Group of counters. How are they looking?
So I think right now we are looking at a point where Adani Green, Adani Transmission, they are starting to look a little bit more, I would say, stable on the charts. Earlier these stocks were going through a very sharp selling. We saw I think many of these stocks correcting by 20-25% and more in the last 6-8 months. And there was a point where I think in February, March, where these stocks didn't find any major buying pattern. You saw these stocks remaining a lot more sideways. But right now, I think these stocks have recovered. I think Adani Enterprise and Ports, they've come back about their respective 50-day moving averages. They've yet to cross over their long-term averages by a decent margin. But I believe that eventually these stocks would also make a strong comeback. So I think once the market settles into a phase that they move from sectors other than the banking and the financials, you'd actually expect that many of these larger cap names would eventually find a lot of buyers. So I think it could be a matter of time that these stocks may pick up in terms of price action as well as momentum.
Okay, that's the take coming in on some of these Adani Group names which are looking interesting. I want to see what BHEL is up to. They've registered a revenue of about almost 27,350 odd crore rupees. That's an uptick of about almost 19% on a year-on-year basis. And the order book as well is looking quite comfortable at 1,95,000 odd crore rupees. They've secured their highest ever order inflows during the year gone by, amounting to about almost 92,000 odd crore rupees. But BHEL had a somber start, and from there it's just been very, very quiet in trade as we speak right now. Aditya, from the entire cap goods pool, what's looking like a strong show? Because even L&T hasn't quite participated yet.
Yes, absolutely. In fact, L&T is probably one of the weaker stocks within the Nifty 50 pack. And talking of BHEL, that too is not looking that strong at the moment. Maybe on the upside, 240 to about 250 is what it can test. I will still wait out for some more time to see how these stocks shape up, maybe some more bit of consolidation. And once the sectoral shift happens from what is buzzing now, then can be the next leg of rally in these capital good stocks. So for now, I'll wait and watch, not be too much in a hurry to get onto these capital good stocks. But surely there'll come a point of time when these stocks will also start outperforming.
All right, so that's the take coming on some of this capital good names and how they're looking on the charts at this point in time. But looks like we are actually going to shut shop near the day's highest point, at least for the benchmark indices. On that note, thank you so much, Pashupati, as well as Kunal and Aditya, for joining us on the show.